Hey, how's it going? This is Seth from REtipster.com, and this video is sort of a follow-up to a video that I put together 2 years ago about a real estate crowdfunding platform called Fundrise. If you're not familiar with Fundrise, it's basically one of many different real estate crowdfunding websites out there where you can take your money and invest it into not just one property, but pools of property. They call these eREITs. So if you're like most investors, you're probably very familiar with investing in mutual funds and the stock market and things like that. But if you want to diversify a little bit, get out of the stock market and get into real estate, but you don't want to do all the nasty hands-on work of dealing with tenants and toilets and contractors and all that stuff, that's what something like Fundrise is for, because you can just take your money, plug it into their investment properties, and just wait for the returns to come, if they come at all. Remember, there are no guarantees with this. It's like any investment. So back when I made that first video 2 years ago, I actually took $1,000 of my own money and invested it into Fundrise and showed exactly what that process looked like. A year later, so 12 months ago now, I did a follow-up video where I went into the website and I showed people what my returns had been in the first year. And the reason I did that was because I had been getting a ton of comments on that first video asking, what have your returns been? How much money are you making back on this? What kind of dividends are you getting? So I put together that 1 year follow-up video last year, and I wanted to do another one of those this year, now that we're 24 months into it, just to give you a quick update on how it's looking. Now, before we get any further with this, I just want to be really clear about a couple things. First of all, I do have an affiliate relationship with Fundrise. I have an affiliate link beneath this video, so just be totally aware of that. But more importantly, I don't want you to take this video as me telling you that you should invest with Fundrise. I don't even really want this to be considered a good or a bad review. This is just me showing you my real world results. And whether you consider these returns to be good or bad, that's up to you. I'm not telling you one way or another. And if you want to invest with them, then, I don't know what your results are going to be, but this is what the experience has been like for me so far over the past 2 years. So just take that for what it is. And with that out of the way, let's dive into the website and I'll show you what things look like. Okay, so again, REtipster.com does have an affiliate link to Fundrise. If you click that link, you'll be brought to a page that looks something like this. If you go through that link and sign up for an account, it will help support REtipster.com in a very small way. Obviously, no obligation to use that, but if you do, thanks a lot. We really, really appreciate it. I'm just going to go up here. I'm already logged into the site, so I'll show you what the dashboard looks like. So right off the bat, we can see the total that my $1,000 investment has earned to date. It looks like my $1,000 has turned into $1,247.96. So how exactly did this happen? Well, let's dive a little bit more into the details and go here to transactions. This page right here is a historical timeline of every single dividend that has been generated by that original $1,000 investment. And back when I first invested that money, I told Fundrise, don't send the dividends back to my bank account, just go ahead and reinvest them. So that's what they've been doing, and that's why this portfolio is now worth that amount rather than just the original $1,000. Over here you can see a little scatter graph of every single project that my money is tied up into. Looks like it's on 158 different active projects. It's also kind of cool, if you click on any one of these things, it'll show you a pop-up where you can view details about that specific property, which I think is pretty cool and informative. You can obviously do that to your heart's content and see as much as you want. You can also see that my portfolio consists of about 65% debt and 35% equity, which essentially means 65% of my investment has been lent out to other investors and developers, and it's treated like a loan where it gets paid back with interest, and that's how it makes money. And then the other 35% is equity. That means that my money is actually tied up in the ownership of a property, and the way that that makes money is when a property is improved and then sold, or when that property collects rent for a certain period of time. So it generates some kind of income. That's typically how these crowdfunding setups work. If we go over here to check out specific performance and get more details on that, so right off the bat you can see what the return has been on a quarter by quarter basis for each individual eREIT that my money is invested into. And we'll talk a little bit more about that in just a second. So when we go down here and check out the annual returns section, you can see that in 2017, it looks like my investment generated an 8% return. In 2018, it bumped up to an 11.4% return. And then so far, in 2019 year to date, it's got a 3.2% return. And the reason that's so low is because this video is being recorded on April 11, 2019. So we're only like not even 4 months into the year yet. I think we're sitting on day 101 of the year so far. But in any event, it looks like we're on track to be pretty close to what it was last year. But obviously, time will tell. Once we get to the end of the year, maybe it'll be higher, maybe it'll be lower. I don't know. But that's kind of how it's looking so far. Down here, you can see a little chart showing where the account value has gone so far. So that's kind of cool. Again, over here, you can see that same scatter graph that we had before, and you can see where the value has gone at the end of each year down here. It's also kind of cool up here. You can also view this in dollar terms rather than just percentage if you want to see it that way. So that's kind of cool. And something else that's worth noting here that I thought was kind of interesting. If we go over here to the portfolio page, we can see that back when I first invested my $1,000, I chose the East Coast eREIT, and there was no particular reason why I picked that one. It was just kind of a random. But something I'm seeing here is that whenever they are reinvesting the dividends like I told them to, they're not throwing it back in that same fund. It looks like they're sort of spreading it out among a lot of the other eREITs that they have. And that's not something that I told them to do. I guess they just sort of made an executive decision on that. And I'm sure I probably gave them permission to do that back when I first signed up and invested my money. But that's one thing that I actually didn't really notice they were doing until just now. So that's kind of interesting. But so far, it doesn't really look like it's hurt anything. I mean, the returns are doing pretty decent from what I can see. You can also go down here and see a lot more project details in this section if you want. And something that's kind of noteworthy about Fundrise and a few other ones out there is that you don't have to be an accredited investor to get involved with this particular platform. If we go over here and check out the frequently asked questions section and see who can invest, it says that pretty much any U.S. resident, unaccredited or accredited over the age of 18 can invest. Now, why is that significant? Because a lot of the other real estate crowdfunding platforms out there, the way they work is you're not necessarily investing in a pool of like 158 properties like I'm currently tied up in. Instead, you're investing in usually just one single property. And that's it. And for whatever reason, whenever a crowdfunding platform is following that model where you get tied up in one property and not a bunch of them, you have to be an accredited investor. And an accredited investor, you have to have a net worth of at least $1 million, or you have to make at least a couple $100,000 per year. You have to prove that with like your W-2s, your tax returns. You have to actually be somewhat rich already before you can even get started with that. And I know there are a lot of people out there who do not fit that profile. So if that sounds like you, Fundrise may be one of those platforms that you would consider getting involved with, simply because they don't have those kind of restrictions of having to be a accredited investor before you can even get started. So that's just something to keep in mind. Now, just speaking for myself, when I look at this kind of investment vehicle, I think it's a pretty solid way, at least so far, it looks like it's been a pretty solid way, where I can just plug in my cash and then I don't have to do anything after that. All these dividends to date have required literally nothing from me. Once my money's in there, I'm kind of just done with it, and those dividends have been coming in regardless. So I won't say the returns have been huge. I mean, if I were to actually buy my own piece of real estate and flip it or improve it or do the things with it that I know how to do, my returns could be way, 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 way higher than this. However, following that kind of business model is not passive in any way, shape, or form. It takes a ton of work on my end. I typically go after projects that involve very, very little risk. However, I know a lot of other real estate investors out there have to take out loans and go into debt and work against the clock, and it can get pretty stressful. And all that stuff goes right out the window if you go with something like Fundrise, because you just put your money in there and they deal with all that stuff. Now, on the same coin, it's also important to recognize you're putting a lot of trust in the people at Fundrise to use your money wisely and invest it in good projects that are actually going going to appreciate or throw off some kind of return in the months and years ahead. Since I've gotten involved with Fundrise, the real estate market has been like pretty good throughout the US. We've not experienced any kind of a major recession. I'm not sure when that day is coming, but when it does come, I have to imagine there will probably be some impact on this. I have no idea what kind of impact, but things in the real estate world have generally been going pretty well since I've been invested with this company. So that's just another thing to pay attention to. I don't think I would ever throw all my eggs in this basket. I don't have any plans to like dump, hundreds of thousands of dollars into this. But I think simply as a diversification tool, if you don't want to have all your money tied up in the stock market, or even if you are in real estate, but you want to diversify further and get into this kind of a managed portfolio where other professionals are handling a lot of stuff for you, you can spread out your risk and not just get into real estate, but spread out your real estate investment dollars among a lot of different properties. As you can see here, 158 active projects is what my money is tied up in right now. Another thing worth noting about Fundrise, which I think is kind of a tough pill for some people to swallow, is that the original principal that I have invested here, that $1,000, I can't get that back for somewhere around 5 years' time. I can obviously have them put my dividends back in my bank account, but that original money put in there is pretty much not available for a good chunk of time. And that's not how it works when you do put your money in a savings account or a CD or the stock market, where it's a lot more liquid. It's not like you can always necessarily get it immediately, but most of the time you don't have to wait up to 5 years to get it. And I know there have been a number of comments I've gotten on some of the past videos I've done on Fundrise from people saying like 5 years is ridiculous, that's crazy. And I think if you think you're gonna need that money back within 5 years, then yeah, it is ridiculous and you probably shouldn't invest in Fundrise. But I think with any type of real estate, you should never plan on that money being easily accessible. You shouldn't really even go down that road unless you plan to have it tied up for at least 5 years and more like 10 years or even longer than that. This is really more of a long-term play. So just keep that in mind if you ever decide to go down this road. And again, I'm not at all trying to advise you to put your money in Fundrise. I'm not even saying Fundrise is the best crowdfunding platform out there. It's just one that I chose to throw a little bit of money in because I had heard a lot about it and I wanted to track and see what the results were of that and then share it with you guys. So I hope you found that helpful. I'm going to have a blog post over at REtipster.com with a lot more information supporting this video, so be sure to check that out if you want more information. And again, if you want to check out Fundrise and sign up for an account and just poke around and learn a little bit more about how it works, REtipster.com/Fundrise. That's our affiliate link. And if you have no interest in that, that's totally cool too. I hope you found this video really informative either way, and assuming the world doesn't end and I'm still alive 12 months from now, I'll plan on doing another one of these Fundrise update videos in April of 2020. So thanks again for watching, and I'll talk to you next time.